Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be sharing with you exactly how I'm dealing with this erratic Bitcoin price. We'll have a look at exactly what's going on in the wider markets to give the overall picture and how Bitcoin fits into that picture. And then come to some sort of a conclusion of how to deal with this particular market. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, I'm going to start off with this very interesting article that I saw, which actually tells you where the price for Bitcoin may be going in the upcoming weeks. So what we've got here is that Morgan Stanley is now going to allow 15,000 wealth advisors to actually sell the Bitcoin ETFs. And that is a very different position to what Morgan Stanley has done over the last many years when it was one of the leading proponents against Bitcoin. So you can imagine with the name Morgan Stanley, the weight of that with its 15,000 wealth advisors is going to have a lot of customers who are now going to have access and an opportunity to purchase Bitcoin in the ETFs. And what they're going to do is they're going to get the BlackRock and the Fidelity products, i.e. the ETFs, in front of their clients. So they're now going to be exposing those ETFs for their clients. And the question is, do you think that's going to make a difference? Of course it is. And this is now an incredible change for these banks, because now that Morgan Stanley has opened the doors, if we scroll down to the bottom here, and you can see here BlackRock's head of digital assets, Robert Michnick, he was asked when he thought the large banks might open the floodgates. He had expected the fourth quarter, but he went on to say that certainly this year is likely. So we're looking at between now and the end of the year. So we're certainly looking for the other large banks, including Goldman Sachs here, as well as Bank of America and Wells Fargo. They're going to be changing their policies to follow suit in soliciting clients. So JP Morgan has just opened the door to all these big, large banks and actively pursue clients for the ETFs, whereas before they were only selling Bitcoin ETFs to clients if they had asked. So a very good development, something we need to be aware of, and something that's going to be fueling the price of Bitcoin going forward. And one of the other things that's going to be fueling the price for Bitcoin is going to be the interest rates and how far they're going to be cut. And it seems to be going forward, not a case of if they're going to be cut, it's going to be when and how much they're going to be cut. And so far, the target rate probabilities here is that there is a 50% chance of getting a cut of around about 50 basis points from the current 5.25 to 5.5. We may get a 50 basis points cut to 4.75 to 5.0. But there's also a virtually a 50% chance of getting 25 basis points. So it's really a question of one or the other in terms of getting a rate cut in September. And again, this is going to fuel the Bitcoin price. So that is the longer term picture with Bitcoin in terms of the background, with a lot more customers coming on board, a lot more people buying Bitcoins, especially in the ETFs. Just moving on to the shorter term picture, we're going to have a look at this liquidation heat map, which seems to be predicting very good ranges over the last many months that we've been looking at this. The major yellow zones are all at the top end here, at around about the 61 and all the way up to about 62. So between 61 and 62 is where the upper range is here. And on the lower side, you can see there isn't much of a range. Now, please remember, this is all about probabilities. It doesn't mean that just because there are not a lot of very strong zones, i.e. the leverage stops down here, it doesn't mean that the price can't come back down here. It just means that there's a more of a propensity, more inclination, more bias to the upside up here around about the 61, 62 than it is down here to the 55, 56. But as you'll see from the later analysis that I do, we still could well come back down to retest lower levels, because historically that's what Bitcoin has done. So that is still a possibility, even though the probability may look like around about 60% onto the upside and maybe about 20% to the downside. And if we move on to the number of Bitcoin holdings by the ETFs, we can see quite clearly the new Bitcoin ETFs, all the 9 here, are now holding holding well over 500,000, with IBIT holding 342,000 and way out ahead of Grayscale, which was the leading holder, and they've now come down to 270,000. But it's not just the ETFs that are holding. You can see this MicroStrategy is holding 226,000, so it's the second largest holder behind IBIT. And then we've got the other ones like Fidelity, etc. So this is quite a moving, dynamic part for Bitcoin, and this figure is going to get greater and greater, especially with the larger banks opening up all their customers to the possibility of buying Bitcoin. When we have a look at the ETF overview, it's giving us some sort of a clue as to why the current Bitcoin price is a little bit subdued below the 60,000. It was trying its best to try and get above the 61,000, but we've had recent selling off of Bitcoin in the Grayscale Trust here, and it's outnumbering the amount of asset inflows of Bitcoin in BlackRock here. So that's over the 7 days here, and we're also seeing quite a lot of bleeding going on from the ARK ETF as well. Okay, moving on to the wider markets, and we're just going to have a look at the dollar first. And what we've been looking at on the weekly time frame, we've had this symmetrical triangle over here, and we fell out of it. So that was our clue that we were going to come and revisit this lower level down here. So this is what we were waiting for. And as you would expect, what we've got is a bounce from this support level back to here. So this is the weekly close. So this would create some sort of a spring for dollar to go up in the shorter term in the next few weeks. But what we would expect with a longer term picture, when we zoom out a little bit more, is that what we're seeing is lower highs being created all along here. So we would expect this not to get above this level anyway, and it may well be to come back to retest this particular candle at around about 104.8 before resuming its journey down to much lower levels. And what we really want to see the dollar is to break the 101 level here. Once we get that, this will come into play at around about 99, and then further on down to these levels here. So over the coming weeks and months, this is where I see the direction of dollar going. And this will allow the wider markets the wriggle room to start going much higher. And of course, the possibility here is, as an alternative to that scenario, is for the dollar to bounce off these levels a few times and just consolidate in this particular range of 104 down to 102, which would mean a continuation of the consolidation that we've been seeing with Bitcoin over the last many months. So let's see how this plays out, but certainly quite a few scenarios with the dollar. And as we know with the dollar, it conducts the other markets on the basis of an inverse relationship. And moving on to the SPX, what we've really got is a very commendable bounce from the SPX all the way from these levels here, 5,100. And while we are creating lower lows here, as well as lower highs along the way, at the moment the overall trend is to the downside. But what we've really got is a very commendable bounce off these lows here. And the fact that we've captured this level gives us a lot of hope that the SPX may well go and test other levels here, especially this red line here at around about 5,400. So look for some resistance at this point. So we may well get up to this point and then get some sort of a rejection, and it is what it does after that that will determine whether this is going to continue to the upside, or are we going to go and get another leg to the downside here. So very important to keep a watch on this. But certainly the depth of this correction has taken many people by surprise, and that all the doom and gloomsters all came out at this point last week. But when you zoom out, you can see that from the end of 2022 here, we do get these wild corrections along the way, but the general trend, as you can see, is to the upside. So this may well be just one of these lower points that we're getting along the way. But if we drew a trend line all the way up here, you can see quite clearly that we are in a very strong uptrend with the SPX. It's quite clear that the overall bigger trend is still to the upside. And with interest rate cuts to be expected over the coming months between now and the end of the year, some people say we're going to get 4 25 basis points cuts, some say 5, but certainly nobody's now talking about increasing interest rates or keeping them on hold. It's all about how much of the interest rates are going to be cut. And this should feed into the continuation of the bull market. And moving on to gold, what we got at the end of the close on Friday was this particular candle. And as you can see, a nice long wick at the bottom. That's always a nice spring to take the price to higher levels. So even if it won't go much higher, at least we should be keeping above these levels here at around about 24.30. But we do need to get above this particular candle here, this weekly gravestone doji candle that we've been talking about for the last few weeks. This is the one that's been conducting this price on the consolidation range here. And what we've got with this candle is the opposite of that. So we've now got the bias more to the upside, rather than with this candle, the bias was to the downside. And moving on to the monthly time frame, it's going to be very interesting where this current monthly candle closes. If it closes the way it is here, this could well form the beginnings of an evening star pattern here, which means that the next candle will be a red candle. And that would then be a very bearish development for the price to come back to much lower levels. But with so much of the month to go, this could quite easily turn into a green candle that breaks above this high here at 24,800. So look out for this. If we can break above this level here and close above this, then this is a continuation pattern to the upside. And moving on to silver, this had a much deeper correction, just like Bitcoin. But we are now currently bouncing with this green candle here. And that was courtesy of the long wick at the bottom at this point. So it looks like the bias may well now be moving and shifting towards the upside for silver. And it would make sense because it's come back to retest these lower levels at this point. And this is a very strong support and resistance from previously. So it's all looking good on the gold and the silver. So if we have a look at the Bitcoin 60-day cycle, that gives us a little bit more insight into what we can expect with Bitcoin going forward. The first thing to notice is that when we came down on this long wick down, all the way down to 49,000, that was last Monday. And the thing to have noticed, as I mentioned in last Monday's video, is to close above this close here of 53,500. And as you can see here, we closed well above that, and the close was actually at 54,000. So this was really the critical bit. Had we closed below this level here, it would have encouraged more of the sellers to bring this price lower. But instead, what we got was a long wick at the bottom, where we actually ended up closing higher than the previous high on the 5th of July. And what that's done is to provide the springboard for much higher levels. And having now gone above these levels here at around about 57.7, this was always going to be a level that once we get above it, we're going to come back and retest that as a support. Had we not gone above this on the way back up, then the chances were that we were going to come back and retest lower levels down here, which you would expect to be around about the 61.8. So had we tested this as a resistance, then we should have been coming back down to around 52, 53. So obviously we didn't do that. We've gone above those levels. So at this moment, from the basis of probability, please listen to what I'm saying. I'm not saying that it's going to come back down to these levels here at 52, 53,000. This is the 61.8 from this level. But having gone above it, the probability of it coming back down is no more than about 10 to 15%. But the possibility obviously exists. And the probability now is that having come back to retest these levels at 57,000, this is where you would expect with a higher probability for the bounce to take place. But what we've got at the moment is that this particular level at 60,000, this was quite a well-defined level, as you can see here. We had quite a lot of support all at this level, apart from a bit of choppy waters here, where it just seems to slice up and down amongst it. But then we got a lot more respect for this level here and over here. And once again, it chopped all the way through with this fall around the 5th of July. So what we're really getting at the moment is, once again, this price level being chopped up and down, which means that this level is losing a lot of respect for the Bitcoin price. And as a result, we need to look at something a little bit different for us to hang our hat on here, and that would be the 21 weekly exponential moving average. This is the level for us to recapture one more time for the continuation of the bull market. And as an example, we can see this in the last cycle, where once we got out of the COVID situation down here, once we'd recaptured it, look at the amount of respect the price gave to this level all the way until it actually fell out of that 21 exponential moving average. But once we recaptured it one more time, that gave us another leg to the upside. But it was at this point that was the first signal that this is now we're going into a bear market mode down here. So very important, the 21 exponential moving average. And even in the previous cycle up to 2018 here, once we recaptured it back in 2015, look at the amount of respect this had with so much support all along on this moving average here. And the fallout at this point was really the signs of the coming bear market all the way down to 3,100 here. So very important to keep an eye on the 21 exponential moving average. And that currently is at 61,000. So it's just slightly above this previously well-defined support level of 60,000. So once we capture this, we should see a lot more buyers coming in with more confidence to try and push this price much higher. But as we can see with the 60-day cycle, we've still got until the 3rd of September. So there's still quite a lot of leeway here. And the expectation for me would be that having gone to these levels, but at the same time recapturing the 53,000 and not closing below it, and having this big spring and going above the 57,700, and now coming back and retesting it, this seems more of a bullish development rather than the fact that the price has come back to 57. This is a very good retest. And as long as we can hold 57.7, we should be able to expect higher levels. But I would not be expecting anything like trying to break 70,000. There just isn't enough room and enough momentum for this to be able to go to these levels. So the best we can really hope for is some sort of a consolidation above the 60,000 level. So anywhere around about 62 to 60. And if we can break above that level towards the end of this cycle here, so let's say if we go above at this point and consolidate around these levels, then that would be setting up for a break above the 70,000 in the next cycle. So quite a few scenarios, because this is not really giving us a very clear picture of what Bitcoin is trying to do. The main takeaway for me is that the recapturing of the 53,000, then going above this level at 57,000 with a very big solid candle here, and now coming back to retest it, my bias would be more to the upside rather than to the downside here. And with quite a lot of the 60-day cycle still to go, the best really we can hope for is some sort of a consolidation around about the 60,000 mark, and that could well be whether we recapture that 61,000 for the 21 weekly exponential moving average. So a lot of people thinking that it may come back down to these levels. Of course, the possibility is there. As I said, the probability of it doing that round to these 51, 52 levels would probably be anywhere around about the 10 to 15%. But as we've seen with previous falls, the price did come back down to much lower levels. But it all depends on how we recover from a big fall like this. And the recovery here was actually very, very good. So what we can see here is that there's no break of structure, although we've created lower lows here all along the way. And we've also created lower highs along the way. So this is very much a downward sloping flag, and that to me still tells me that this is more of a continuation pattern to the upside. So we still expect this to happen, at least if not in the next cycle, maybe the cycle after that. The current cycle up to the 3rd of September, I would not be expecting us to break the 70,000. If we have a look at the momentum seems to be exhausting a little bit here. Of course, it can keep going higher at this point if we get some sort of a big demand coming in, pushing this price to much higher levels, but it looks like the momentum is really getting a little bit exhausted here. So let's see where this goes to. The thing that really gives me a lot of encouragement is when you look at the volume here. When this candle came down last Monday, it actually came down with an absolutely huge amount of volume, the likes of which we hadn't seen since this particular candle here. But the difference between this volume at this point of the market and this volume at this point of the market is very distinct. And that is, when you zoom out a little bit, you'll see why this is more important. We can see that due to the ETFs in January, we had a huge run up all the way up to the 73,800. And this volume candle here, which was the last one that reached these levels, was in response to a huge amount of buying. So this was not what you would call a capitulation candle. But after a period of very severe consolidation here, what you've got is a lot of sellers that have been getting exhausted. And this kind of a candle at this point would suggest that this was more of a capitulation candle of the seller exhaustion actually taking place. So what that really means is that this could well be the beginnings of the last shakeout before we start moving to much higher levels. And some people would definitely see this as the last final shakeout of the weak hands. But as we've seen with the 60-day cycle, there's still much more room to go where this could actually have some sort of a consolidation around these levels. So there's still quite a bit of consolidation perhaps to come to create the structure for this big move to the upside. Okay, so now we're going to move on to looking at this. Yes, you've guessed it. We're back to the Brexit indicators because all the doom and gloomsters all came out when we had this candle here. And we really need to take a step back and keep a calm stature by looking at the proper indicators. And as I've said many, many times before, we're not here to make any predictions about where the price for Bitcoin might go. What we really want to do is to be guided by the Brexit indicators. So when they are triggering off, that we have topped out, and that would be the time for those who want to sell. That'll be the time to sell. And there are many people who want to ride out all the highs and the lows for the next 10, 15, 20 years. And we just have to respect that mindset as well. But for those people who really want to get out as near to the top as possible, we have to look at some of the Brexit indicators to guide us. And at the end of the day, always remember, it's virtually impossible to get out exactly at the top. But the Brexit indicators give us a very strong clue to get as close as possible to the top as we possibly can. And I'm just going to show you a couple today, and that is obviously the pi cycle. This is the one that's never been wrong so far. So this is the one that holds the most amount of credibility and integrity. And of course, there's a possibility that this time around, the green line here, which you would expect for it to cross over the red line, at which point of the cross, that would be a great signal for the end of the bull market. Because in the last 5 peaks, that's exactly what we've got. So this is the strongest of the signals. And based on the historical perspective, this is where we would expect that would be the case of the market topping out. And it is at this point that I would be looking at the other Brexit indicators to see whether there is confluence. It's no good just relying on one indicator. We have to rely on a lot more than one. And the second one, which I'm going to be looking at, is this one here. And that is the Maya multiple. A very interesting development on the Maya multiple. And that is that we are currently, as you can see with this yellow circle, right back to where we were at the beginning of the bull market here. So we're right at those levels one more time, and all because of the courtesy of this fall that we got last week. And this is from the on-chain data that we've got here. And what the author here is saying is that looking at the Maya multiple, we can see that the level we're at now is the lowest level since the 2022 bear market. And the Maya multiple is below the 200-day moving average. And if you believe this to be a bull run still, then this is a fantastic buying opportunity. If your analysis leads you to think this is the end of the bull run, then this is the first sign of a decline into a bear market. And his base case is certainly the former, i.e. that we're still in a bull market. But at the end of the day, nobody knows for sure. And this is what everybody must always remember. There is no YouTuber out there, there is no on-chain data out there that's telling you one way or the other. We've only got some of these indicators to give us the direction of the market. And everybody has to come to their own conclusions. But as the author says, nobody can be sure. But his belief, and my belief as well, is that we are still in a bull market for the reasons I've given you earlier. So in essence, the Maya multiple normally tops out at this level here at 2.4. And as we can see, we have not been at anywhere near that level since the beginning of the bull market around here. So that leads me to the conclusion that we have quite a long way to go now, especially now having fallen to the level where the bull market started back at the beginning of 2023. So coming back to the title of the video, how am I dealing with this? And obviously I can only share my own thoughts, my own mindset, my own views, my opinion about what the market is showing us. And based on some of the data that I've shown you now throughout this video, my belief is that we are still in a bull market. And as such, the journey that we've been on since the bottoming out of the bear market here, this journey I'm expecting to continue, maybe not to the end of the 2024 now. This is becoming less of a probability now. This became a high probability play, i.e. a left translated cycle, when we came up to this previous all-time high. But the consolidation that we've had now for the last 6 months is bringing this more into view than an end to the bull market at the end of 2024. So this is now becoming the more likely route for this current bull market to take. So when you have an erratic Bitcoin price like we've just had recently over the last week or so, for me, as long as we don't break the structure, which we haven't done because we didn't close below the 53,000, so the structure is all intact, this journey is still intact, and the potential for it to go on to the middle or the end of 2025 is still intact. So as a result of that, my response has been continue to buy the Bitcoin miners whenever we have a dip like this. So what I was doing last week was picking up on a dollar cost average basis more of the Bitcoin miners. And as you know, I don't hold any Bitcoins, but Bitcoin is obviously related directly with the Bitcoin miners. And with the increased volatility with the Bitcoin miners, as well as the leverage play that I'm expecting to get between where we are now to the end of the bull market, I'm continuing to buy the Bitcoin miners. Because as Bitcoins come down from the 73,000 down to last week's price of 49,000, that was a 30% fall, while the Bitcoin miners were showing around about a 60% fall. So the Bitcoin miners are volatile both to the downside and to the upside. So when Bitcoin goes down by 30%, they go down by a much greater amount. But on the converse side, when Bitcoin goes up, they go up by a leverage play of maybe 2, 3, or 4 times, as evidenced by the previous 4-year cycle. So for me anyway, and I can only speak for myself, it's not obviously financial advice, and that is I have to be fully allocated. And if I come across any extra money, then I'm buying up on a dollar cost average basis any of the major Bitcoin miners like CleanSpark or Marathon. Whenever they have a dip, I tend to buy up a little bit more. And if you relate that to Bitcoin, we've gone from 73,000 at the top here to the 49,000. So for me, if you just look at this on a bigger picture view, if you look at this consolidation here, it's the same consolidation that we got at this point. And now when we look back at this consolidation, the high of which was about 30,000, the low of which was about 21,000. So from 21,000 to 30,000, this was a great opportunity to buy. Whether you bought at 21 or 30, now that we're here around about the 60,000, this was a great opportunity to have bought. And similarly, as I mentioned in quite a few of my videos, when I've said that, is this a last buying opportunity? Just to clarify, because I think a lot of people don't seem to understand when I say the last opportunity, what I mean by that is that whether you buy at 73,000 or at the current low price that we got at 49, 50,000, so whether you buy at 50,000 or 70,000, this particular price range here may well be the last opportunity to have bought. When we get to this point here, wherever this is going to be, we really don't know. The top is going to be when the Brexit indicators are going to tell us. The top is always going to be when the Brexit indicators that we've been looking at all seem to line up with each other. That'll be the point of the summit here. And that summit could be 100,000 all the way up to 500,000. We really don't know. But at that point, this range here between 70 and 50,000 will prove to me to be an incredible buying opportunity. So if some people have bought at 70, yes, your portfolio may be showing a little bit of a loss around the 50 or 60,000, but at any one point your portfolio is going to be going up and down along this way. But when we move into the next phase, then those who bought around the 70,000 will certainly be showing a big profit up here. So in conclusion, what I can say is that as long as you believe that the Bitcoin bull market is still intact and we're still on our way to much higher levels towards the end of 2025, and as long as you believe that, then the response is to try and buy the dips if we can. Of course, if you think that we've topped out, then this may well be the time to get out, but certainly that is not my view. My view is that we're going to go much further. And at that point, I'm going to leave it there. I hope you found value in the video. If you did, then please remember to like and subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.